Hey traders, it's Leaf West again, making a new video for the day. What I have in front is the FAS, the Inverse Three Times Financial Bear ETF. It's one I traded a couple times today. It was the more interesting thing I did today, so thought I would talk about it. The first trade was just a simple contrarian viewpoint, emotional trade, playing the emotions of the open, and I went long relatively quickly at 37.13, I think the price was, and I made 50 cents on it. My goal was 50 cents, and my stop was 20, and I took my 50 cents. But what's more interesting is a comment someone sent to me today, and they were very frustrated again. It seems like I attract a lot of frustrated traders to my site. But anyways, they're frustrated with how to get involved in the markets that gap up so high, and they seem too scared to do things and don't know where to get involved and end up buying at the wrong spot and selling at the wrong spot. And that is in part because they are using their emotion to get involved, not using a sort of calculated trade. And I'll just show you again. I talked a bit yesterday in the video about key reversal points and how you get involved there. As you know, I like to play contraction patterns. And if you can't get a contraction pattern because the market's moving so quickly, I look to sort of key reversal spots. And those are usually highs or lows, swings highs or swing lows. And then I put up a retracement grid and try and trade off of that retracement grid. So for example, on the FAS, I have it up here because I did the first trade, but I watched and I got involved at the end of the day on a key reversal trade. So I just thought I'd show the sort of the two or three that really jump out at me to try and highlight what I'm talking about when I'm talking about a key reversal trade. So the first one I'll call up is the sort of big key reversal made at the morning's highs, the market's low, and the FAS's market high after around about 10:30. Again, 10:30 is a very pivotal time where you often get reversals in the market, and sure enough, that's what happened again today. But I'll snap up a grid basically from the last sort of key swing low to that swing high key reversal point that I suspect is a key reversal point. You don't know to draw this grid until you get three or four candles past it and you look back and you say that could be a high, so you snap up the grid and you watch what happens. And the levels I have are 38.2%, 61.8, and 78.6. And those are standard sort of fib grid lines. But the key thing is how you interpret them. So, for example, if this market was going to go higher, I would want to see the market holding above the 61.8% line and showing strength that it wants to stay above the 38.2. And then as the market looks like it wants to try and move higher, might buy a starter between the 38.2 and the breakout line, and then see what happens on the pullback before committing additional capital to it. And on the reverse side of the trade is if the trade is going to reverse and head downward, I'll look at interest at the trade once it gets below 61.8 and see how it handles the 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 range between the breakdown and the 78.6. And so here's a perfect example on that side of things. Was the FADs came down, went through, basically couldn't hold the 38.2. You could see it was holding up for a little bit, broke down, went through the 61.8 relatively quickly to under the 78.6, and then consolidated at just above the breakout point. So if I wasn't watching the trade at the time, but if I was watching this, that's something that would attract me to getting involved in this trade. So I would have tried to get involved in the trade somewhere in this range here before it breaks, because what I like to do is I like to have a bit of a cushion so that if it goes out and comes back in, I'm not feeling the pressure that the trade's going against me right away. And here is really the test. Once it breaks, what does it do? Well, here it consolidates and doesn't even poke its head back inside the key reversal pattern, and then finally breaks away. and then comes back and doesn't even get back to the pattern before it breaks down and goes to our first target. So that's where again I would have had as a target and taken my profits on. So that's how I play a key reversal. So you don't have to be in the market overnight to catch a winner in the market, as you know. First thing, all you got to do is look for a pattern and play it. So let's take a look at another key reversal point in the day. I was looking at the end of the day, as you know, from my blog, that possibly we're going to sell off in the last little bit of the day, last hour, last 45 minutes, and so therefore I was hawking the FAS, and I'll zoom this down to a 1 minute chart so that we can see these things a little better as they get closer to the end of the day. So if you can imagine this chart, and I'll just show the grid. As we were coming down and we made potentially a low of the day, again, you don't know if this is a low of the day, but you move to a low and you move off it quite quickly. So you wonder, is that a low of the day? So what I'll do again is go back to the previous sort of swing high, draw my grid, and then watch the levels. And again, you have to ignore the candles to the right because you don't know what's happening. You've drawn your grid probably by the third or fourth bar after you've made a potential low or potential high, whatever the case may be. So here again, price moves pretty quickly through the 38% level, and it moves through the 61.8% level, and it touches the 78.6 and sells back down. Then bounces back up and tries again and fails to get above that 78.6. So to me, that's telling me right now that it's not ready to break out of this pattern. So I would not be looking long there. In my view of what may happen at the end of the day, stopped me from looking at it on a short basis, because again, I thought the trade here was potentially to try and catch a reversal on this instrument and make a quick dollar or two. So, and again, these big spiky candles, you see this big range bar there, those aren't the kind of, that's not the direction you want to go with until it proves that it wants to break out, not on a quick snapback from the low up to that 78.6% retracement level. So then what did the market do? It worked its way down to below the 38.6, because we're looking downward now, not upward. So it's below the 38.6, does a little bit of consolidation, breaks out. So again, if I was on this trade and I was trying to get short based on how I was reading this market, I would try and short in this space between 38.6 and the break of the pattern. So that again, so if it breaks and comes back up, I'm still fine. I'm not feeling any heat on the trade. I'm sitting there saying, well, it's fine. In fact, if it comes back up and shows me weakness, I may add again right there. And then it breaks the pattern and away it goes. And whereas the target for the trade was down here at 34.39, which it didn't get to, because what happened was we did get my reversal, which I did trade, and I'll show you that pattern here. So again, market comes down, pushes down, makes what could be a low. After 3 or 4 bars higher, you say, okay, let's put up our grid. So you go to the previous sort of swing high, draw it down to the swing low, potential swing low, and watch. So you can see again, this was much different than the last attempt at reversing the market. We on a slower basis made our way up to 78.6, traded back down, and we didn't get down to the 38.2, and we snapped back up. So I bought this trade right in here at, I think it was 96 cents. Yeah, so it was 35.96 again, and it didn't even give me any heat on the trade. Bang, right to my target at 36.71. So I made basically a quick dollar on the trade. I took it off of the target because again, here's the VWAP, and I was expecting the last 10 minutes for the trade to reverse and for people to come in who were short the market to cover, and for people who wanted to get long to pile on. So I was actually looking to get long the SSO at the end, but I didn't get my charts up in time to get there. Anyways, that's how I handle key reversal points. And even if the day seems like a bad day in terms of getting involved in day trading, there's always patterns, contraction patterns that you can look at and trade. You just got to know how to where in that pattern to get involved, and where the high risk is and where the low risk is. Anyways, I hope you enjoy it. All right, thanks. Bye.